everyone, this is Lien with BK Forex. Today's video is about how to trade FOMC. 8 times a year, the Federal Reserve holds a monetary policy announcement, and this is oftentimes one of the most closely watched events of the year, especially if the central bank is considering an interest rate change. Every Federal Reserve or FOMC meeting is followed by a press conference from the central bank, and 4 times a year, economic projections are released. When it comes to trading the Federal Reserve monetary policy announcement, the first thing you need to know is when the announcements are made. You can find the actual day on the Federal Reserve website or any major economic calendar for that matter. The monetary policy announcement itself is always made at 2 p.m. New York or Eastern Time, followed by a press conference by the Federal Reserve Chairman 30 minutes later at 2:30 p.m. Now, 4 times a year, they've got economic projections and dot plot released, which includes the individual views of central bank presidents. When that happens, that comes with the 2 p.m. rate decision and not the press conference. So it comes sooner. And then the central bank chairman explains or provides more color as on those projections when he or she delivers the press conference. And when the central bank chairman speaks, the most important thing that he or she says is typically said in the first 15 minutes of the prepared speech. Then, he or she goes on, delivers the speech, it's completed, and then reporters are given the opportunity to ask questions. And generally speaking, the burning questions on the minds of investors are typically asked in the first 3 questions. And so, for traders, there's a couple of things to take away from this. Number 1, the initial knee-jerk move can happen right after the 2 p.m. Monetary policy announcement, regardless or if not an interest rate change is made. Now, if there's economic projections released, it could be even more of a significant knee-jerk reaction. However, that knee-jerk reaction may not be the move that lasts for the rest of the day. Number 2, the move that we see in the knee-jerk reaction is typically short-lived because investors have to brace for what the Federal Reserve Chairman is going to say at the press conference 30 minutes later. So, usually in the first 15 minutes after the initial FOMC announcement at 2 p.m., you will see some volatility. Then there'll be a slowdown. There'll just be a grind from 2:15 to 2:30. And then at 2:30, that's when, things start to get interesting, but not right at 2:30, because at 2:30 is number 3. That comes the time when the Federal Reserve Chairman speaks, and investors will be listening in closely for the guidance on, the change that was made and what they can expect to come in the meetings ahead. So, anything important is generally said in the first 15 minutes, and there can be a lot of volatility. But by 3 p.m. New York time, usually the dust has settled, and we'll know what the main takeaway is and the market's interpretation of that, and whether they want to be buying U.S. dollars or selling U.S. dollars. And that move that happens can last for the rest of the U.S. session and maybe even longer. Here's what I mean. This chart here of the Eurodollar shows the last FOMC rate decision in January 2022. Eurodollar rallied at 2 p.m. when the rate announcement was made, even though no changes were made. Then at 2:30, when Fed Chairman Powell delivered his press conference, the U.S. dollar strengthened significantly, with Eurodollar erasing all of its gains and turning lower. The sell-off continued throughout the U.S. session. It did stop a little bit after the New York close and between the New York close and the Asia Open. But once Asia opened for trading, the selling of Eurodollars resumed throughout the Asia session, into the European session, and even into the New York close of the next day. Now, the reason why we're talking about this today is because there's a Federal Reserve meeting this coming week, and the Federal Reserve is expected to raise interest rates for the first time since 2018. This would be the beginning of what is expected to be a prolonged tightening cycle. Now, after the January meeting, investors were divided on 50 versus 25. There was a pretty large contingent that thought that the Federal Reserve could raise by 50 basis points in March. But that was before what seems like World War III. It was before Russia decided that they wanted to invade Ukraine, throwing the world into chaos. And now, as a result of that, nearly everyone expects a 1/4 point rate hike from the Federal Reserve in March. Now, there's no question that the Federal Reserve, when they release the economic projections, they're going to be upgrading their inflation forecast because, those gas prices, those commodity prices have gone through the roof, and they're not going to come down quickly. Their growth projections, on the other hand, are unclear because while it does certainly seem that growth projections should be shaved, as we move into week 3 of the invasion, the Federal Reserve may still view it as too soon to assess the impact on the U.S. economy. So we'll have to see. But we'll get to know right away at 2 p.m. how those economic projections are changed. And that's why right at 2 p.m. we could have a significant knee-jerk reaction. When it comes to trading rate decisions, the most important thing to understand are expectations. Now, the market expects the Fed to raise interest rates by 25 basis points. So if they surprise with a 50 basis point hike, the US dollar will soar, as it shows just how concerned that they are about inflation and how much more or much greater importance they put on inflation versus growth at this stage. Now, if they don't hike at all, that would also be a surprise. That would be very bad news for the greenback. If they do exactly what the market expects and raises interest rates by 25 basis points, then it's all up to Powell's press conference and his guidance. The question will be, will he express more concerns about inflation or growth? The answer to that question will decide how the dollar, stocks, bond yields, commodities, and even crypto trades for the next 24 hours, 48 hours, next few days, weeks. Now, had Russia not caused what appears to be World War III, this would be a lot easier, and we could easily say that the moves post-FOMC will carry over not only into Asia session, but for the days, weeks to come. But that's not the world that we live in right now. And we have to realize that, how the war progresses, the geopolitical headlines, whether they reach a diplomatic solution, will all matter. And they, in some ways, especially on a near-term basis, may overshadow the general FOMC policy direction. So what I'm trying to say is that let's imagine the Federal Reserve raises interest rates by 25 basis points, and they remain hawkish. They believe that the impact on the rise in inflation is going to be temporary. The gas prices are going to normalize once the war is over, and they still plan to raise interest rates consistently throughout the year. So that guidance would be dollar positive. But if suddenly Russia decides to pull back and they reach a deal with Ukraine, then even though this may be the Fed is looking to raise interest rates on a more consistent basis, the dollar could fall and fall quite aggressively against the euro because the euro has been sold off so aggressively and is very vulnerable to short squeeze. So expectations is very, very important. Now, with the FOMC rate decision itself, there are 3 ways to trade the rate decisions. And I talked about that in my How to Trade Central Banks Rate Decisions video that I've included in the description of this video on YouTube. The first is proactively, getting in before the rate decision and out once the announcement is made. That is generally my favorite way to trade. The second is to trade reactively once the announcement is made. That's Boris's favorite strategy. He will be live trading FOMC with our BK Forex members on Wednesday, like he does for NFP and FOMC every single month. And the third is to stand aside and not trade at all, because not trading and not losing is just as valuable as winning. So I wish you all of luck on FOMC day, and if you want to trade with us, you want to learn how to trade, check out bkforex.com.